All right, welcome everyone to the deep dive. Today we're going deep, as always, of course, on Korea's economic situation as of, well, right now, March 2025.
Fresh off the press.
And our guide for this journey is, well, it's the very latest KDI Economic Trends report.
Mm.
Think of this as like going beyond those surface level headlines you see everywhere. We're going to try to unpack those core trends and think about, well, what do they actually mean for you, for the average person?
Yeah, absolutely.
Yeah.
And this KDI report, it's a big deal.
It is.
It's the leading indicator report that comes out from one of the most respected economic think tanks in Korea.
Right.
So we're talking, expert level analysis here.
Yeah. So we've gone through all that data, all the, the nitty-gritty details in this report, all those key economic indicators that, most people's eyes would probably glaze over just looking at to try to bring you the most important insights.
Yeah, we don't want to drown you in numbers, right?
No, not at all.
We want to equip you with that solid understanding of what's really happening, those big economic shifts, those pressures
Yeah.
that are kind of shaping things right now.
Right. And what really jumps out at you just from kind of a first glance at the report is, well, it paints kind of a mixed picture.
Yeah.
We're seeing progress in some areas, definitely some challenges in others. And of course, it seems like no matter what, those big like external forces are always there,
Always, yeah.
shaping Korea's economic direction.
Yep, they're a constant, yeah.
Yeah. Okay. Well, let's dive into it. Let's unpack some of this. And I think a good place to start would be with overall economic activity. What are some of the things that jump out at you from the report?
Well, one thing that's really interesting is that there's been this kind of a noticeable slowdown in the overall production growth. So back in January, it took a pretty noticeable tumble, going from a decent, positive 0.6% all the way down to negative 3.5%. So, yeah, I mean, it's not a, uniform drop across every single sector, but it's definitely something to pay attention to.
Right. And the report specifically calls out the construction sector as a big part of that dip. And of course, we always have to remember that January this year had fewer working days than usual because of the holidays.
Mm-hmm.
But when we look a little deeper, specifically at industrial production, we see like really interesting divergence.
Yeah.
Like on the one hand, semiconductors, they're showing this impressive strength, right? Like growth jumped from 13.6% to a really robust 20.8%.
Yeah, it's amazing.
It's pretty amazing.
Yeah.
And I think that really just reinforces, Korea's position as this key player in that global tech supply chain.
Absolutely. I mean, semiconductors are a clear engine right now for the Korean economy.
Yeah.
But the strength is being somewhat offset by some temporary declines in other areas, like, for instance, electronic parts.
Yeah.
Went from a, healthy 13.6% growth to a negative 1.6%.
Yeah.
And machinery equipment also saw a downturn from 0.3% down to negative 7.5%.
Wow. Oh.
So it just highlights that the story, it's not a simple one. It's very, very industry specific.
Right. Yeah, it's not as simple as just looking at like a single overall number and saying, okay, well, this is the situation.
Right, exactly.
And it's not just manufacturing, right? Like we're also seeing that service production has been weakening as well.
Yeah.
It actually slipped from a small amount of growth, 0.3%, to a 0.9% contraction.
Mm-hmm.
And it seems like that's mostly because of declines in wholesale and retail trade as well as in education services.
Yeah.
Even though, transportation and storage, they did see some growth.
Right. So it does make you kind of wonder about the overall state of domestic demand, doesn't it?
Yeah, it really does.
If we're sort of connecting this to the bigger picture of domestic demand, which we'll get into a little bit later, this weakness in wholesale and retail trade, it certainly suggests that consumption isn't as strong as it could be.
Yeah.
And the decline in education services, it might point to some broader shifts in how households are spending their money.
Right.
Where their priorities are.
Interesting. And then there's the construction sector, which the report doesn't really sugarcoat it. They basically say it's in a significant slump.
Yeah, it's having a tough time.
Production there contracted by a massive 27.3% in January.
Wow.
Down from negative 7.4% the previous month.
Yeah, that's a pretty steep drop.
Yeah. Now you mentioned earlier something called the base effect. Can you explain that a little bit more for our listeners?
Yeah, sure. So basically, the base effect is kind of like a statistical distortion.
Hmm.
It's where you see a really dramatic change in a number, but it's not necessarily because of, some fundamental shift. It's more because of what you're comparing it to.
Okay.
So in this case, like last January's construction output was unusually high,
Mm-hmm.
and that's kind of creating this illusion of a really steep drop.
Right,
Yeah.
right. So it's not quite as bad as it looks maybe at first glance.
Right. But the thing is, even when you account for that, even when you look at the seasonally adjusted figures, which kind of smooth out those, temporary fluctuations,
Hmm.
we're still seeing a decline. It's negative 26.8%.
Yeah. So there's something real there.
Yeah, there's definitely some underlying weakness there in the construction sector.
Right, right. Okay. Now, amidst all this kind of, not so good news, there is a bit of a bright spot on the manufacturing front.
Uh,
The average capacity utilization rate actually continued to rise, going from 73.3% to 73.8%.
oh, interesting.
So even though, we've seen those production dips in specific areas, it does seem like, there's some underlying strength there. Makes you wonder if manufacturers are maybe expecting, demand to pick up in the future.
Yeah, that's a great point. That increasing capacity
Mm.
utilization rate, it does hint that, even though actual production might have been temporarily, affected, um, the the potential's there for future growth
Mm-hmm.
in manufacturing.
Yeah. Okay, so we've looked at kind of the supply side of things with production. Now let's shift gears a little bit and talk about demand. What's driving demand both here in Korea domestically and also internationally.
Sure.
And one of the things that the report really emphasizes is this continued weakness in domestic demand.
Hmm.
And it seems like that's being driven by both, that kind of sluggish consumption we talked about,
Yeah.
and also just a general lack of investment in construction.
Right.
And to make matters maybe a little bit worse, the improvement in leading indicators is also weakening.
Oh,
And they point specifically to the real estate downturn as a key factor there.
I see.
So it seems like all of these things are kind of, feeding into each other.
Yeah, absolutely. And this weakening of the leading indicators, that's something that, you really want to pay attention to because it suggests that this softness in domestic demand, it might be around for a while.
Yeah. Yeah.
And the real estate sector, it really has a big impact on the economy.
It does.
Right. It affects not just construction, but how confident consumers feel.
Mm-hmm.
The health of related industries, it really kind of ripples outward.
Yeah. Yeah, definitely. Now, when we look externally, we talked about semiconductor exports being a bright spot, but it seems like even there, the growth is starting to moderate a little bit.
Yep, that's right.
And then when you look at the other export categories, the weakness is continuing. So overall, export growth has been modest, and that raises some questions about how exports are going to perform, going forward. It's like Korea can't just rely on semiconductors forever, right?
Right, exactly. I think it's really fascinating here, this kind of interplay of factors,
Yeah.
Like on the one hand, you have semiconductor exports. They've been a key driver,
Mm-hmm.
but then, their growth is moderating. And then you combine that with the weakness in these other sectors, and it really just highlights how vulnerable, Korea's export-led economy can be to these shifts in global demands
Right.
and in prices too.
Yeah. Yeah, absolutely. And speaking of how people feel about things, the report does touch on sentiment a little bit.
Hmm.
And it seems like, at least domestically, the impact of that political instability that we saw on sentiment is starting to ease, which I guess is a good thing.
Is that good? Yeah.
But there are growing worries about the international trade environment,
Hmm.
and particularly about the escalating trade tensions that are being led by the U.S.
Yeah, those are definitely casting a shadow over things.
Yeah. It feels like those global trade issues are one of those things that could have a really big impact on Korea, right?
Absolutely. While domestic confidence is kind of recovering, from that low point, these external trade tensions, they represent a significant downside risk.
Mm-hmm.
They can hit export demand. They can make businesses less likely to invest.
Yeah.
and just generally dampen the overall economic sentiment.
Right, right. Yeah. So it seems like domestically demand is soft
Hmm.
externally. There's still some growth there, but there's some challenges brewing.
Right.
Let's maybe zoom in a little bit now and take a closer look at consumption.
Okay.
What are people actually buying or not buying, I guess is
Uh,
the question.
Well, so back in January, retail sales were basically flat.
Hmm.
0% growth after a 2.5% decline.
Right.
And the report suggests that kind of temporary stabilization might be due to, the holiday season and people spending money for that. However, all those underlying weaknesses that we've been talking about, the high interest rates, the low consumer confidence, they're still very much a factor.
Mm-hmm. Mm-hmm. And when we break down those retail sales, we see a really mixed picture.
Yeah, yeah.
Like food and beverage sales saw this temporary surge of 13%,
Okay.
which probably has a lot to do with those holiday gatherings and everything.
Right, right.
But then on the flip side, sales of durable goods, things like communication devices, computers, they took a massive hit, down 23.4%.
Wow.
And home appliances also saw a pretty big drop, 11.9%.
Yeah, that's a pretty stark contrast, isn't it?
Yeah, it's almost like people are buying those necessities
Right.
for the holidays and the celebrations, but they're holding back on those bigger ticket items.
Yeah, yeah, and I think that contrast really just highlights how sensitive different kinds of consumption are
Hmm.
to these current economic conditions.
Mm.
Yeah, people might be spending more on food during the holidays,
Hmm.
but that doesn't really mask this broader trend of consumers just pulling back on discretionary spending,
Right.
especially on those bigger items.
Right, things that maybe they can put off a little bit.
Exactly, exactly.
Yeah. And it's not just physical goods either, right? Like we're seeing that service consumption is down as well in a number of areas, things like accommodation and food services, education, art, sports, recreation.
Mhm.
So it really does seem like, consumers are tightening their belts across the board.
Yeah, yeah, I think that's a fair assessment. The continued decline in service consumption, it really does kind of reinforce this whole narrative of weak domestic demand.
Hmm.
And these sectors, they're often pretty vulnerable to changes in how consumers feel about the economy
Yeah.
and how much money they have to spend.
Makes sense. Now, on a slightly more positive note, the Consumer Confidence Index did show a little bit of improvement in February.
Yeah.
It rose from 91.2 to 95.2.
Hmm.
So it's not, a huge jump, but it does suggest that maybe some of that negative sentiment is starting to ease.
Yeah, yeah, it's definitely a welcome sign.
Mm-hmm.
But it's important to remember that the index is still below that neutral level of 100.
Right.
So it's more like a gradual easing, I'd say, rather than a strong rebound.
Right. Right. Okay. So not out of the woods yet, but at least maybe things are starting to look a little bit better on that front.
Yeah, we'll see what happens.
Yeah. Exactly. Okay. Let's shift gears again, and talk about investment.
Okay.
Let's look at both equipment investment and construction investment.
Sure.
Where are businesses putting their money? Where are they holding back?
Okay. Well, so investment in equipment actually saw a decrease of 3.1% in January,
Oh, wow.
which is quite a swing from the 10.5% growth we saw in December.
Yeah, that is a big swing.
Yeah, it's interesting.
Mhm.
The report suggests that it's probably just a temporary dip, maybe related to those fewer working days we talked about.
Right.
Um, especially since the leading indicators for equipment investment are still looking pretty good.
Okay.
So it might just be a blip on the radar.
Gotcha. Now we do see continued strong growth in transport equipment investment,
Hmm.
although it did moderate slightly from 18.9% down to 14.2%.
Right.
But investment in machinery that actually declined,
Mhm.
and especially in semiconductor manufacturing equipment,
Okay.
which saw a pretty big drop from a really strong 31.6% growth down to negative 2.9%.
Hmm.
That feels a little counterintuitive,
Yeah, it does, doesn't it?
given how well semiconductor production is doing.
Yeah, it's an interesting nuance, right? Like on the one hand, the sector itself is booming
Mhm.
in terms of production.
Yeah.
But then you look at the investment in new equipment, and that can be a little bit more irregular.
Mm-hmm.
It often depends on specific expansion cycles,
Right.
and it might just reflect that, there was a period of really strong investment, and now things are just kind of, taking a pause.
Okay. So maybe not a reason to panic just yet.
Exactly.
But then the report does highlight what could be a really positive sign.
Okay.
There was a significant increase in machinery imports in February.
Oh, interesting.
It jumped from 0.9% all the way to 15.9%.
Wow.
And this was actually led by a substantial rise in those imports of semiconductor manufacturing equipment,
Hmm.
up 33.5%.
So maybe that January dip was just a blip after all.
Yeah, maybe so. But then of course, we have to acknowledge that the report does sound a note of caution.
Yeah. Yeah.
They point out these downside risks to future equipment investment because of those growing external uncertainties we talked about.
Right. The global trade situation.
Yeah, the trade conflicts.
Yeah.
It makes sense, right? Like if companies are worried about whether they're going to be able to sell their goods internationally, they might not be as eager to, invest in making more of them.
Yeah, absolutely. I mean,
Mm.
if global trade tensions escalate
Mm-hmm.
and that really starts to hurt export demand, businesses, they might just become a lot more hesitant
Yeah.
to invest in new equipment, even if, the current indicators look good.
Right. That makes sense. Okay, so equipment investment, kind of a mixed bag there.
Yeah.
Construction investment, unfortunately, seems a little bit more bleak, to be honest.
Yeah, the construction sector is definitely facing some challenges.
Yeah. The value of completed construction saw this accelerating decline, dropping 27.3% in January, down from negative 7.4% the previous month.
Mm.
And that's across both building construction and civil engineering projects.
Yeah, it's pretty widespread.
Yeah.
And as we mentioned earlier, part of that sharp drop is due to that base effect.
Mm-hmm.
But it is concerning that even when you adjust for that, we've now seen a decline for 6 months in a row.
6 months.
Yeah. So it really underscores just how deep and persistent this slump is in the construction sector.
Yeah, it's not just a blip. It's something that's been going on for a while.
Right. Exactly.
And it's not just, the current numbers either. Like the leading indicators for construction investment are also weakening.
Yeah. Those are painting a pretty worrying picture for the future.
Yeah. Building commencements, they continued their decline, down 32.6%. And construction orders received also fell by a big amount, 25.1%.
Yeah. It doesn't look good for the near future of the sector.
No, it really doesn't. Okay. Well, let's move on. Let's talk about, that really crucial part of the Korean economy, which is, of course, trade.
Mm-hmm. Exports and imports.
Yeah.
The lifeblood.
Yeah, exactly. So in February, we saw a slight increase in overall exports, up 1% after a pretty big, 10.2% decrease in January.
Okay.
But the report points out that if you actually look at the average daily export value, which takes into account the number of working days and everything, there was actually a decrease of 5.9%, which is lower than the 7.7% growth we saw in January. So it's almost like the headline number is a little bit misleading.
Yeah, you gotta dig a little deeper sometimes.
Yeah, exactly. And if we break things down a little bit more and look at the categories, exports in what's called ICT, which is information and communications technology.
Right.
They actually saw a decline on a daily average basis, falling by 5.1%.
Okay.
And that was mostly because of weakness in general purpose semiconductors.
Interesting.
And then this was compounded by a drop in non-ICT exports of 6.2%, again, on a daily average, which seems to reflect that slower global demand that we've been talking about. And the report also mentions that there have been some significant price drops in some key types of semiconductors.
Oh, okay.
So it's not just about the volume of what's being shipped. Right?
No, absolutely not. I mean, those price declines are pretty notable.
Yeah.
25% drop for DDR4 8GB, and then a massive 53.1% fall for NAND on 28GB.
Wow.
I mean, so those kinds of price pressures, they really have an impact on the overall value of ICT exports,
Right.
even if the quantities might be Yeah. Holding up a little better.
Right, right, yeah. And geographically, if we look at, where things are going, we saw decreased exports to both China and the US, which, those are huge markets for Korea.
They are, yeah.
Exports to China, where, a lot of those general purpose semiconductors go, were down 8.2%,
Hmm.
and exports to the US fell by 5.9%,
Okay.
particularly in general machinery, which again, probably has to do with those trade policy uncertainties that we've been talking about.
Right.
So it really does seem like those tensions, they're starting to have a real impact on what's actually happening with trade.
Yeah, the decline in exports to both China and the U.S. It's definitely a big concern
Yeah,
because they're such important
there we
partners.
are.
And I think that weakness in general machinery exports to the U.S.
Mm-hmm.
it could very well be one of the first signs of
Yeah.
those trade tensions starting to really bite.
Yeah. Yeah, that makes sense. And just to, kind of reinforce that idea that there's a broader slowdown happening, the the report points out that even when you adjust for the Lunar New Year holiday,
Right.
the average exports for January and February combined, they still show a decline of 4.8%.
Yeah, so it's not just a holiday thing.
Yeah, it's something, something bigger.
There's a more fundamental trend going on there.
Yeah, yeah, for sure. Okay. Now on the import side, we did see a small increase, 0.2% in February after a 6.4% decrease in January.
Hmm.
And this was because of, imports of non-energy items going up,
Mm.
which offset a drop in energy imports.
Mm.
And all of that resulted in a trade surplus of $4.3 billion.
Hmm.
So Korea is still, exporting more than it's importing, which
Yeah.
I guess is generally a good thing.
Yeah. That shift to a trade surplus, it's kind of interesting, isn't it?
It
Because
is.
it suggests that even though export growth is weak,
Mm-hmm.
demand for imports within Korea is pretty subdued as well.
Yeah. Yeah, that's a really good point. Now, the report also has this special section that they call a box.
Okay.
And they use that to specifically talk about the potential negative impact of U.S. tariff hikes
Mhm.
on key Korean export items, things like automobiles and parts, ICT,
Right.
and general machinery.
Mm.
And given how much of Korea's total exports and really overall export volume those sectors represent,
Yeah, they're a big chunk.
it feels like those tariffs, if they do go into effect, could have a really substantial impact, right?
Yeah, I mean that box really it really highlights a major vulnerability for the Korean economy.
Hmm.
The U.S. is such a significant export destination for those key sectors,
Mm-hmm.
and if those tariffs go up, it could really hurt their competitiveness,
Yeah.
and then that would have a ripple effect. It would affect other industries.
Right.
It could affect employment.
Yeah. Yeah. It's all connected.
It's all connected. Yeah.
Okay. Well, let's move on to another really important topic, which is the labor market.
Jobs.
Jobs. Yeah. Exactly. So January actually saw a modest increase in overall employment, 135,000 people.
Yeah.
But the report does point out that this increase was at least partly due to those government supported job programs that we've talked about,
Right.
and that it actually masks continued job losses in construction
Mm-hmm.
and in those more domestically oriented services.
Mm-hmm.
So again, it's kind of a mixed bag, right? Like the headline number doesn't tell the whole story.
Yeah. Exactly.
And we see that most of that increase, the sectors that were driving it were mainly public administration and health and social work,
Okay.
which, probably have a pretty big government component. And that contrasts with, those declines in wholesale and retail trade, accommodation and food services, and then, that big drop in construction employment that we've been talking about.
Mm-hmm.
So it almost feels like the private sector is facing some bigger challenges.
Yeah, and I think that divergence, between those different sectors really reflects what we've seen elsewhere.
Mm-hmm.
Where some areas are doing okay, but others are struggling.
Yeah. Yeah, definitely. And speaking of struggling, the report does note a rise in the number of people who are in temporary employment and a
Mhm.
continued decline in self-employment and daily workers.
Right. So it kind of suggests this shift maybe towards less stable forms of
Yeah,
work.
yeah. That's a really good point. And while overall, The employment rate for that kind of core 15 to 64 age group remained pretty stable.